Hey everyone, welcome back to 8 Minute Finance, the channel where we break down money, crypto, and investing into fun, simple, and culturally relevant explanations. Whether you're a student just starting out, a working professional saving for the future, or someone curious about how wealthy people actually grow their money, you're in the right place. I'm Alina, and today we're diving into something every successful investor seems to have in their portfolio: ETFs. What are they? Why do rich people hold shares of them? And more importantly, should you be buying them too? By the end of this video, you'll not only understand ETFs, but also see how they could fit into your own financial journey. Let's get started. So, first things first, what even is an ETF? ETF stands for Exchange Traded Fund. Think of it like a basket of stocks, bonds, or other assets that you can buy with just one click. Instead of buying one company, you're buying a whole squad at once. It trades on the stock exchange just like any regular stock, which means you can buy or sell it instantly during market hours. Imagine you're at Costco. You don't buy just one soda can, you grab the bulk pack. Same thing here. ETFs let you own dozens, sometimes hundreds, of companies in one package. That's instant diversification without needing to be a Wall Street genius. Another way to picture it: if the stock market were a playlist, buying a single stock is like listening to one song on repeat, while an ETF is the whole playlist: variety, balance, and less boredom. ETFs started in the 1990s, and now there are thousands of them. Some track the entire US market, some focus on specific industries like tech, energy, or healthcare, and others even track things like gold or crypto. Some ETFs are even international, giving you exposure to companies in Europe, Asia, or emerging markets without needing a global broker. And here's the kicker: the biggest investors in the world, from Warren Buffett to everyday people using Robinhood or Fidelity, all use ETFs. They're simple, efficient, and beginner-friendly, but also powerful enough for billionaires. Here's where people mess up: stock picking. Everyone thinks they're the genius who'll buy the next Tesla before it moons. But in reality, most folks end up like this. I bought AMC at $50 and now it's $2. Ouch. That's the danger of chasing hype, memes, and FOMO. You can win big once, but more often, you lose hard. It's stressful, it's risky, and unless you've got time to research like a pro, it's basically gambling. And the emotional roller coaster? That's real. One bad stock pick can keep you up at night, constantly checking charts and news, hoping it bounces back. Now, contrast that with ETFs. Instead of putting your entire lunch money on one rapper dropping a hit album, you're betting on the whole Billboard Top 100. Somebody's going platinum no matter what. Same logic applies. Even if one company underperforms, the others in the ETF help balance things out. Real example: if you only bought Tesla in late 2021, you'd be down nearly 30% today. But if you bought the S&P 500 ETF, SPI, in the same period, you'd actually be up around 20%. That's the magic of diversification. You're not relying on luck, you're relying on the entire economy to grow, which historically it always has. And here's another key shift: ETFs remove emotions from investing. You don't have to constantly guess which company is hot. Instead, you're buying into broad growth: less stress, less panic selling, and more steady wins. All right, here's where it gets real. Let's stop talking about what ETFs are and start talking about what they can actually do for you. Picture this: you invest $100 a month into an ETF like the S&P 500, ticker SPI. Doesn't sound like much, right? That's like skipping Starbucks a few times or passing on a pair of Jordans. But if you did that consistently for the past 10 years, you'd have put in about $12,000 total. Guess what it'd be worth today? Over $19,000. That's a $7,000 profit just for chilling and letting your money cook. Now scale that up. If you invested $500 a month for 10 years, you'd have around $95,000 today, with only $60K invested. That's not a side hustle. That's your money turning into its own employee, working overtime while you sleep. And let's say you're more of a tech believer. You put that same $100 month into the NASDAQ 100 ETF, QQQ, heavy hitters like Apple, Microsoft, and Nvidia. Your $12K invested would have turned into over $25,000 in that same 10 years. You literally doubled your money by betting on the future of tech. Here's why successful people love ETFs. They diversify automatically. You're not stressing over, should I buy Tesla or Ford? You're just owning both inside an ETF. They're tax efficient, less capital gains drama than trading stocks every month, and they're liquid. Unlike real estate or a business, you can sell your ETF shares tomorrow if you need cash. Think of it like this. Buying individual stocks is like betting on one NBA player to carry your parlay. ETFs are like betting on the entire all-star team. Even if one dude has an off night, someone else is dropping 40. And just so you're aware, ETFs aren't only about growth. There are dividend ETFs that actually pay you income every quarter, so you're earning cash while still invested. That's the kind of flexibility that makes them attractive for both young investors and retirees. So here's the bottom line. ETFs aren't flashy. They're not that friend showing off their get-rich-quick crypto flip on Instagram. They're more like Drake dropping a playlist. Solid, reliable, and guaranteed to stay in rotation for years. The wealthy know that real power isn't chasing hype. It's compounding steady wins over decades. An S&P 500 ETF? That's owning pieces of Apple, Microsoft, Amazon, and hundreds more in one shot. And while your cousin is bragging about his one lucky stock pick, your ETF just quietly grows, year after year. The legacy move is this. Small contributions today can snowball into generational wealth tomorrow. Imagine putting money into an ETF, not just for yourself, but for your kids and even grandkids. That's how long-term wealth is built. Slow, steady, unstoppable. And here's another layer people don't often talk about: peace of mind. With ETFs, you don't have to check the market every single day. You can focus on your life, your career, your passions, knowing that in the background, your investments are quietly compounding. Now, before you rush and buy the first ETF you see, let's talk about how to actually pick the right one. Not all ETFs are created equal. Some charge higher fees, some follow smaller markets, and some are more volatile than others. A good rule of thumb? Look at the expense ratio. That's the annual fee you pay to the fund. Lower is usually better because the less you pay in fees, the more money stays in your pocket. Most popular ETFs like SBI or VTI charge less than 0.1%, which is dirt cheap compared to mutual funds. Also, pay attention to what the ETF is actually holding. If you want tech exposure, QQQ is great, but if you want stability, maybe go for a broader fund like VTI. And if you're chasing dividends, something like VYM could fit your strategy. The beauty of ETFs is that you can mix and match them to fit your goals: growth, income, or balance. Finally, remember this: consistency beats timing. It's not about catching the perfect entry point, it's about staying invested. Even small amounts grow massively when you give them enough time. That's the real secret behind why wealthy people love ETFs. They're designed for patience, not quick flips. If you're ready to take that first step, check the description. I've got a referral link that gets you free stock just for signing up. Literally, your first share can cost you nothing. Free is free. And if you're enjoying this breakdown, don't stop here. We've got playlists on stocks and crypto that cover everything from Bitcoin to dividends, so you can build a real foundation. Drop a comment and let me know. If you could only pick one ETF to start with, which one would it be? I'll be reading and replying to as many as I can. This is Alina with 8-Minute Finance. And remember, boring money moves are often the ones that make you rich. Stay patient, stay consistent, and I'll see you in the next one.